The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
You know what time it is. It's time to check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who not only is potentially Satoshi, but is also the editor of CoinDesk State of Crypto newsletter. Welcome back, Nick.
Good morning and happy Friday.
Happy Friday to you. There's so much to get to, Gensler's comments, things like that. But the White House has put out we've been waiting for these reports, and it looks like we waited for nothing. Correct? Is that what I'm gathering in all these White House reports that came out on crypto? Explain it.
So this morning, the White House, as well as four of the federal agencies, the Justice Department, Treasury Department, Commerce Department, and White House Office of Science and Technology Policy, all published reports in response to President Joe Biden's executive order on crypto, basically laying out, answers to a lot of the questions that Biden asked. So I think it's fair to say that there isn't a whole lot in terms of concrete policy prerogatives we can expect. Instead, these reports kind of more take an analytical view as to what the current status quo is. So, for example, the Treasury Department took a look at concerns about money laundering and illicit finance, the potential benefits or use cases, or even need for a central bank digital currency, i.e., a digital dollar, competitiveness and consumer protection concerns. The White House paper similarly took a look at the technical considerations of a central bank digital currency. So a lot of these reports are really just kind of saying, all right, well, this is what the current world looks like. And, the idea is the U.S. should remain competitive around the world in terms of having crypto policy. So there is a question now as to, just how these reports might translate into actual action. The only recommendations that we could, really clearly see happening soon are recommendations to continue enforcement actions from the various agencies, and that's really just a continuance of the status quo. The White House itself did put out a framework saying here's what we're looking at. I think the most interesting thing to me is the suggestion, the possibility that there might be some kind of a federal licensing regime recommended by the reports, but there's not a lot of detail on that.
So speaking of enforcement actions, of course, Chairman Gensler made some comments that spooked the markets, so definitely spooked the Ethereum market just right after the merge. And, you want to go into a little bit of detail for the folks at home who are waking up and looking at their balances diminished on their portfolios.
Well, so this was yesterday. Chair Gensler spoke to the Senate Banking Committee to just the oversight of the SEC overall was the main topic of the hearing, but obviously crypto came up quite a lot. A lot of questions about the SEC's approach, whether or not there's going to be any kind of guidance or, any kind of broad assistance that would let companies know how they have to register, what kind of disclosures they might need to put out, or even, some clarity as to whether a project that is decentralized need to actually register with the SEC and go through that disclosure process. But what really seems to have spooked a lot of folks is after the hearing, Gensler told reporters that state cryptocurrencies may, be securities, may resemble securities. I think the argument there is, if you have someone putting their, let's say, an unnamed ether, perhaps one that recently moved to a proof of stake system, if they're putting their ether into, or their crypto into this pool in the hopes of generating more crypto as a result, it could be a security. There's genuine debate around this. I've seen attorneys argue about this for years now. So, it's probably going to require a bit more clarity to say, okay, sure, ether might look like an actual security now. Plus, Chairman Gensler, of course, speaking generically, not to any specific cryptocurrency. And he's been very careful not to call specific cryptocurrencies securities unless, actually, I can't think of a time he actually has. But the SEC generally won't do that unless they have.
I think he said it. I think he said in an interview with you. He said that they are securities. When he was talking about
well, he said the
tokens.
vast majority, but he was very clear. Like, he was very specific to say, he doesn't want to prejudge any specific cryptocurrency. He's very careful about that.
Yes, indeed. Finally, Nick, so embattled crypto lender Celsius that is facing bankruptcy proceedings. They've recently filed for permission to sell their stablecoin holdings. What can you tell us about that?
Yeah, so it looks like Celsius has filed to basically try and generate some revenue by liquidating their stablecoin holdings. They say they can generate about 23 million, I think. So they're holding about $23 million worth of stablecoins. This is just the company thinks that it can sell these assets to continue funding its operations. The stablecoins they'll be sold at par, so it's not like they have a concern as to what the valuation actually looks like. Stablecoin's a stablecoin. The idea is it's going to be worth $1. So this is just kind of a procedural thing. I think Celsius is just saying, well, hey, we have this pocket of funds that we could use to not completely have to shut down while we go through this bankruptcy process. Can we do that? And, there's going to be a hearing on October 6th, so we'll learn a little bit more as to whether the creditors have concerns about this, so Celsius's former customers, investors, if they'll have, any concerns or any, major issues with this, or if the court says, yeah, sure, go ahead.